There's no easy way to say this, but 2022 has been a horrible start to the year for investors. In fact, for some parts of the market, it's been really, really bad. The Nasdaq, that's the collection of some of the largest technology companies in the world, is down over 11% since the start of the year, which is the worst it's ever seen, even worse than when we compare it to the 2008 financial crisis. Some growth stocks and those companies who've recently IPO'd, including very popular stocks for investors here on YouTube, are down more than 50% since the end of 2021. And all of this is breeding a culture of fear, and a lot of people are worried. It's hard to look at your investments if you're already in the market and see red numbers, especially if nothing has actually changed in the world or changed with the fundamentals of the company that you're invested in. I mean, has their software all of a sudden gotten 50% worse in just a few months? And then to everyone who is yet to invest, and here in the UK that's the vast majority of the country, they're now sat on the sidelines with New Year's resolutions to get in the market thinking, is this a good time now, or should I just forget about the whole investing malarkey and stick to my post office savings account? In this video, I wanted to cover off some points about the fundamentals of investing, ask the question about when the best time might be to invest, what kind of strategy should be used in a market like the one we're in now, and also I wanted to address some of the panic and weird behavior that you're going to see from people on this platform in times like this, as the whole financial influencer space on YouTube has only been around for a relatively small period of time, and there's lots of lessons that you can learn to save yourself a ton of money. So firstly then, the big question which has bugged investors since the markets began, should I invest now or wait? I pretty much ask myself this question anytime I want to buy anything in real life, and I'm sure you do as well. Should we buy a house now or wait? Should we get a new car and trade the old one in now? Is it the right time to upgrade and build a new PC, or will the graphics cards be too expensive? Every day we're faced with choices that could have potentially drastic impacts on our financial well-being. However, investing, unlike a lot of these choices, isn't about flipping a coin and getting lucky if we get the result that we actually want. With investing, when done correctly, everyone can win, and it's not a zero-sum game, unlike trying to get the best price on a second-hand car. Remember to firstly distinguish between the differences in investing and trading. When investing, we're putting our money to work over the long term to make a gain, and we really mean many years to make the most of it. Trading, on the other hand, is done on a lot more of a short-term basis, and this is entirely more risky, because you're trying to time the market. You're saying, if I buy it today, this could be cheap, and in a few months, I reckon I could sell for a profit. Most traders lose money, especially retail traders, and that's you and me. And even those who do win, they only win a very, very small amount, and it's really not worth the stress on your health, nor is it worth the pain to your bank balance. So the bottom line is, when investing, trying to time the market isn't needed, and more importantly, over a long period of time, the key thing is to actually get investing in the first place consistently. The longer you invest, the longer we have to get through any downturns like now and get to the other side, which over those long periods of time is in the up direction. And it doesn't go up because magic or because we hope it will. The concept of the market is that it reflects all of the companies that make it up, which is a collection of profit-making businesses which over time make more profit, become more efficient and more productive. This value then increases the size of the market and so on. It's why the global market grows over the long term, even if in the short term, anything can happen. What's the answer then? Do you still invest now or wait? I mean, just think about this. Almost every year in history, you can go back and find either a video or a news article that says the market is looking expensive at that time. Can you imagine in 2016 or 2010 thinking, I'm just going to wait for the market to cool down a bit before I invest? And remember what we just said, in any given year, as the market increases in value, you're very likely to be near all-time highs. In fact, all-time highs have occurred since 1950, on average 16 times per year. So more than once every month, you will be in a position where the market has never been so high. I actually had a similar decision a few months back when I moved some cash to a new ISA with Vanguard, and rather than messing around, I just invested the whole amount into the S&P 500 at once, not looking at how high the market was. And I did this because I knew that this money would be in there for such a long period of time, so the price of the market index in that short term wasn't relevant to my own decision making. At the end of the day, it's up to you, but if you read any kind of advice from some of the world's greatest investors, they'll say the same thing, and the most important thing about investing is being in the market in the first place. And also that trying to time the market and buy at the bottom is an absolute fool's game. I like Peter Lynch's famous quote that says far more money has been lost trying to time the market waiting on the side than would have been made just keeping it invested. It might be worth taking one of his advice. Just a thought. And just before we talk about some of the issues that you might face as a new investor by listening to popular YouTube finance influencers, let's quickly just address one more issue, which might be a video on its own right. Now, I've actually covered this topic a few months back, so go check that out. And it's the question of whether you invest all at once or gradually, something known as dollar cost averaging. Now, for most of us, if we get paid monthly, we'd probably want to invest as we get income. and set up a direct debit to do so. But if we had a lump sum in savings account, for example, making us no interest at all, 5k, 10k, maybe even more just sat there, well, the data says that in any given day in history, if you invest your money using a lump sum all at once, you'll win around 65% of the time across a 10-year period. And that's compared to taking your money and drip feeding it in over a year or so, spreading it in each month. However, the question is another personal one, and I forget who said this quote or which one of my books I read that in that explained this better than I could have, but you need to do what's right for you. And the quote said something like, if your investments are keeping you up at night, you're probably taking too much risk and it's not worth the stress. If you have a portfolio that allows you to sleep soundly, regardless of the market conditions, then this is really what you want to strive for. Plus, if you only have that money every month, then just do that. Lump sum investing is what you technically have. Trying to time the market is a complete fool's game. And sure, you might get lucky and find the bottom of the market once, twice, or even more. Bound to happen to some people. All that happens is at least those individuals thinking that they're some kind of market genius who then end up making huge gambles with their newfound arrogance. Don't fall into that trap if you want to have any money left. Quickly, let me just touch on this point. You can absolutely lose money whilst investing, and it's all part of the risk that you're taking. Risk is a part of everything we do in life, and even a risk-free approach of keeping all of your money in a bank account carries with a certain level of risk. In fact, it's a guaranteed level of risk, as you know that your money will lose its value over time with inflation. So investing is essential, not optional. But of course, there are many ways to invest with high levels of risk and many ways to do it with lower levels. In the market right now, high-risk investors and speculators are having a really, really tough time, as you might guess. People with money in popular growth stocks who are not profitable and are deep into the red, with many of these people down more than 50% from some of the prices just a couple of months ago. The issue is, does this really matter? And it all comes down to why they were investing in the first place. Many people want quick money and fast gains, 10 times their money in a few weeks. And in the last 2 years, this has seemingly been really, really easy. I mean, just look at companies like Tesla. But that's not normal at all, and most companies never survive forever. And lots of new companies especially go broke for a huge number of reasons. The market does not owe you anything. If you've done your research and you're a long-term investor, then sure, but there are still no guarantees. But do remember that by using index funds and choosing to invest in the market, using your tax-free accounts like an ISA, in the long run, you'll be a lot better off than most of the time. At the end of the day though, it's up to you. At the moment, you're going to be staring at lots of fear-mongering, lots of FUD, plenty of videos about an upcoming market crash. Firstly, we've not even seen a crash just yet. Let's just address this point. To get to that point, we'd really need to be looking at 20% losses across the wider market and beyond. At the moment, we're seeing a correction, and certain stocks have crashed, but that's not a market that's crashed. Now, it may do, but just do yourself a favor and check the market as a whole. Secondly, investing is new for a lot of people, including all of the popular people you see on this platform. Anyone around my age in their 30s has only ever invested during a bull market and favorable conditions with super low interest rates and relatively low inflation. If you do want to find someone who had been through the dot-com bubble, you'd have to look at much older people who, quite frankly, aren't on YouTube, at least as the presenters. You'll even struggle to find anyone who went through the financial crisis. Unless you know your history, an idea of a crash or a prolonged bear market where things go down or don't move much at all are just something you've heard about. Now, what this means is that we've all been through a period where we only know the stocks go up, including highly speculative stocks and companies making no profits, whether it's an electric vehicle company who doesn't make any cars or a special acquisition company. We've also been through a period of unprecedented growth in retail traders and people getting into investing for the very first time during that boom period. Almost any stock you could have picked went up, and some a lot more than others, leading to the people watching thinking that the so-called experts were some kind of stock market geniuses. Nobody wants to get rich slowly, they want fast money, and they don't want index funds, because those are for boomers, right? Unfortunately, this has led to a huge number of people with a really skewed perspective about what kind of returns they should be getting. Remember that even the best in the world, Buffett himself, has beaten the market by a relatively small amount. Yes, it adds up over the years massively, but it wasn't 5 times his money each year. If you could have done that every year, you'd be the richest person in the world in a very short period of time. It's just not realistic. Also, when people say they're going all in, or this is a stock I just bought, or even here are the stocks I'm buying today, all of these style headlines are not favorable to long-term investing behavior. Making impulse buys and sells or saying you're about to put 50k into a stock is just not relatable. 2 points here. There's been studies showing that the more you trade, the lower your returns. And secondly, remember that 50k for some of these YouTubers would be the same as you or me putting in a week's pay into a stock. Just because the amounts look high, this doesn't mean that they're some kind of stock market god. Nobody knows the way the markets will go. If anything, hasn't this month just shown us what could really happen? Just be really careful out there and remember that entertainment and getting your views is the main goal. And I'm also going to be guilty of this to some extent too. Don't copy people just because they tell you that they've bought it, or follow their research if they use smart words or impressive looking lines on a chart. It's all a smokescreen that reduces your wealth in the long term. There are good channels out there who advocate really good practices, tell you to invest with your tax-free accounts, use broad market index funds and spend less money than you make, but too many just think that you can make millions, buy and sell, forgetting to tell you that they're going to have to drop 50% of their profits on taxes because they're using a general account, and also forgetting to remember that they have hundreds of thousands of income coming in that is spare for them to play with, whereas you or I just can't do this every day. If anything, if we are heading into a crash, you'll see who the real long-term investors are and who the speculative traders are, who is genuine and who is fake, just after a quick buck. They'll be easy to spot as they chop and change their strategy depending on what side of the bed they got out of, and they'll always sensationalize things to get your views. Just be careful. Listen to their words, but verify what they're saying outside of this space. Either way, it's up to you guys. Look after yourself out there and remember to take action that's right for you. Don't let anyone tell you what the right way to invest is. It's a personal decision that you need to live with, and that's specific to your needs and requirements. It's really easy to get caught up in all the emotions and make poor decisions. So just try and keep a cool head. Stand back from the news and take your time. Anyway, thanks so much for your time. Drop me a like if you've enjoyed the video, subscribe for many more, and I'll see you guys in the next one. Or until we see a possible crash or whatever's next. Happy investing.